So with one of our previous SOP changes to the SBA guidelines, right, we were able to do partial changes of ownership where previously you weren't able to do that. And so the new rule for the SOP is requiring sellers in a partial change of ownership to provide a limited guarantee of the full loan amount for a minimum of 2 years after disbursement, regardless of the amount of ownership retained. So before, they could stay on as less than 20% and they didn't have to be a guarantor. Now it's saying they have to guarantee the loan for at least 2 years. So this is a big change. I mean, it was great change before where we could do these partial buyouts, or partial buy-ins rather, and then the current owner didn't have to be a guarantor. Well, that's not the case now. They have to be a semi, what was the wording they used? A limited guarantee, meaning they're guaranteeing the loan amount for at least 2 years. So that's a big change. We have a deal right now where we're analyzing a partial buyout where they would own less than 20%. They wouldn't have to be a guarantor. Well, now it's changed. So this is going to put a little friction into the business acquisition, structures that we're seeing. Although maybe sellers won't have a problem, maybe they will. We'll find out how this all plays out. Lots of changes. I'm going to go through more changes now. We touched on this in a previous video. I'm going to talk about it again. Requiring all lenders with delegated PLP authority to process all loans under their delegated authority, with the exception of loans to refinance same institution debt and international trade loans where liens securing the collateral will not be in first position. So I interpret that as, look, you can't just send us your PLP lender. You have underwriting authority. You can't just send us your crap loans and have us do it. Now you got to be responsible for all that. So I think banks will be a little bit more conservative on loans they were sending out non-delegated. So that'll tighten up a little bit. Decreasing the maximum loan size for 7A loans from 500,000 back to 350, and increasing the minimum acceptable SbSS score for 7A small loans from 155 to 165. Tightening up, you got to have better credit score. SbSS is the credit scoring model we use for these small SBA loans. The majority of lenders do, at least. Restoring the requirement for a 10% minimum cash injection for loans to startup businesses. That's nobody was really doing no money down deals anyways. Making merchant cash advance, MCA, and factoring arrangements ineligible for debt refinances. We talked about that in a previous video. A lot of these people are in stacks of MCA, first, second, third, fourth lien, and they're trying to consolidate SBA into an SBA loan. Now we can't do it. Terrible. Disallowing multi-step partial change of ownership transactions. Okay. Clarifying the criteria for evaluating the eligibility of a business operating under a management agreement. Further clarifying that you have to be either a U.S. citizen or a permanent citizen of the United States, not anything temporary. So they're just clarifying that. Reinstated the franchise directory. Lenders are again responsible to analyze whether some or all of a loan is available to the applicant. So this is what we called credit elsewhere. That's now coming back. Another one here is a couple forms came back in that we have to sign. Clarifying the seller debt may only be counted as equity injection if on standby for the full term of the loan and does not exceed 50% of the required injection. So now it looks like the most they can do is a 5%, not up to 7.5%. Reinstated minimum life insurance requirements, reinstated the hazard insurance requirement for all loans over 50K, reinstated the tax transcript verification requirements for all loans. So basically, they're tightening down a little bit or a lot, you can consider, on the guidelines, which makes me believe that we are seeing higher default rates, and they want to keep this business. Now, through the SBA guarantee fees, this program is not actually subsidized because those fees pay for the program, which is a great thing. So I think they're trying to protect that because we are seeing higher default rates in these business loans. So anyway, if you are looking for SBA 7A, 504, USDA, BNI loans, or any type of government guaranteed business financing, we also do some alternative business financing. You can go to bookwithbeau.com. Be happy to meet with you.
Are you ready? It's time to get the tools, prompts, and guidance you need to scale your business. With my team of VAs, my calendar stays full with qualified appointments. Now I want to help you do the same. Hi, I'm Beau Eckstein, and I've put together an exclusive ebook that will help you supercharge your productivity, scale your operation, and close more deals using virtual assistants and AI. Here are the key points you'll discover: productivity boost, scalable systems, and how to close more deals. In this free ebook, you'll discover proven strategies I've used in my own business, strategies that have helped me go from doing it all myself to building a high-performing team that runs like a machine. Get your free copy now and unlock the secrets to growing your business faster than ever before. Please visit bizscalingplaybook.com.
Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.